Welcome, everyone. I want to thank Jeff and all the good people at Metastock for giving me the opportunity to speak, and I'd also like to thank all of you for attending today's presentation. This promises to be a very educational webinar. You're going to give you a lot of free, great information that you can probably start using as early as tomorrow if you'd like. Just to give you a little bit of background about my website, Specialist Trading, as you see here, is my website. We are an educational first website. Basically, what we do is we teach traders how to make their own decisions and how to empower them with the tools and the information that I've accumulated through my years of trading. Now, to give you a little bio about myself, I've been trading for roughly almost 37 years now, 36 going on 37 years. I started my trading career on the floor of the Pacific Stock Exchange. I was actually on the floor for a total of 16 years, and 9 of those years I was a specialist for Donaldson, Lufkin, and Jenrette. For those of you who aren't familiar with what a specialist is, if you ever look and see the old photographs of the floor, of the trading floor with all the paper on the ground and all the people yelling and screaming, the people behind the booths or behind the large screens, those are the specialists. And what that basically means is that if you wanted to purchase or sell a particular stock, you had to go to the person who specialized in that. You just couldn't buy it or sell it from anyone. So each specialist had roughly anywhere from 35 to 50 stocks that you specialized in. So I did that for 9 years. After I left the floor in the mid-90s, I managed money. I continued to trade, and I virtually got involved in just about every and any market you can trade. Now, as I said, I've been trading for 37 years roughly, and I've seen and gone through every market imaginable, any environment you can think of. From the crash of 1987, I was on the floor when that happened, through the great bull market that happened after that. I've seen volatile markets. I've seen quiet markets. I've traded just about each and every strategy or system you can think of. And about 5 years ago, I started Specialist Trading, where I just mentor and teach. As I said, we are an educational site. Everything that I've accumulated in my 37 years of trading. So that way, we can really shorten your learning curve. Now, even though I provide you with strategies with all buy and sell signals and ways in which to buy and sell, we really are more about empowering you once again so that you make your own decisions. Too many traders lose money because they take themselves out of the game. They rely either on a trading room or some guru or some system to make their decisions for them. But at Specialist Trading, we teach you all the things, once again, that I've accumulated and then mentor you along the way to fine-tune a strategy that meets your needs so that ultimately you can make your own decisions, okay? So, with that said, what we're going to be talking about today, before we go on with that, I'm sorry, there's a disclaimer here. We just want to make sure we're required to show you our disclaimer. We're actually showing you the Metastock disclaimer first. Please take a second to view that and realize that we can in no way guarantee that any of the things we're about to present will be predicted and will be repeated in the future. Now, what I want to talk about today, the title of today's presentation is The Correct Way to Trade with the Trend. Now, once again, I've seen and traded just about each and every type of style and method there is. I used to try and pick tops and bottoms. In fact, believe it or not, I tried to pick a bottom during the crash of 1987, and I'm sure you can see what happened to me during that when I was on the floor. So picking tops and bottoms will you know, they will give you nice profits here and there, but ultimately it's that last trade that you take that gives away everything that you just made on the ones that work. So it's more, it's more inclusive to really trade with the trend. What you want to do is you want to be in sync with what the market is doing. Even though you may not hit these, great, tops and bottoms that are so exciting to be a part of, what we're really looking for is being in sync with the market so that you can have a nice consistency to your trading. So I'm going to show you the correct way, one of the correct ways actually that we teach at Specialist Trading to trade with the trend. Now, once again, I just want to show you our disclaimer. I'm going to show you some actual trades as well as performance results, but please remember that we can in no way guarantee that any of these results will be repeated in the future. So as you're taking a second to view the second disclaimer, I'd also like to mention that I do like to take questions. In fact, I will answer each and every one of your questions, but please wait till the very end of the presentation. I know the presentation seems to move a lot smoother, and if we wait till the very end, we'll have a lot more time to answer them. As well, I will give you an email address as well as a phone number to contact us if you have any questions. So I know a lot of people love to ask a question the moment it comes up, but if you just kindly write it down and try to remember it, I promise I will get to it at the very end, okay? So please wait off on all of your questions, and we'll get them at the very end. Now, as I stated, when I traded on the floor, I tried to pick tops and bottoms. In fact, that was the way I pretty much traded. But guess what? My first year as a specialist, I really had nothing to show for it. In fact, I didn't know if I was going to be a specialist much longer because I couldn't really seem to make ends meet. I was basically treading water. I would have about 7 or 8 or even 9 great trades where I picked the exact top or exact bottom. And there was always that 10th trade where I gave everything back. And so it wasn't until I really started to really do some soul searching and I came in contact with my own mentors, these were specialists on the floor, that they taught me that the real way to trade is once again in sync with the market as opposed to trying to tell the market when it's going to top out or bottom out, and to really keep things simple. So we're going to see that exemplified perfectly in what I'm going to be sharing with you today. It's going to be extremely, extremely simple. Once again, you can probably start implementing all of these things I'll share with you as early as tomorrow. And we're going to be in sync with the trend, okay? We're never, ever going to try and pick a bottom or a top because in my 37 years, I've really discovered that that is a recipe for disaster. All right, so here's what you're going to learn today. I'm going to give you 2 edges. The first one is our proprietary indicator, which will help us find out what the trend is. Then the second edge will be an entry, stop, and exit rule type of strategy that really will come together and form the generic rules of one of our really most consistent strategies. That's strategy number 1, which we teach at Specialist Trading. I'll show you a lot of chart examples so that you really fully understand how it works. And then we'll go into the question and answer period. Okay, so remember, once again, please wait till the end of the class to have any questions, and then we'll get to it, okay? All right, so let's start out by looking at this chart, okay? As we can see here, you know, we're obviously, if we look back in BBY, this is a nice uptrend that we've been having. If we really, you know, look back in hindsight, it's easy to see how, you know, it was going straight up the entire time. So someone would say, well, yeah, it's easy to say, looking back 3-4 months that we were going up. And obviously, we are in an uptrend. So obviously, we wanted to purchase while we're in an uptrend. But how could we see where to purchase the most opportune places to purchase it while it was happening in real time? Now, if we look here and we're looking to buy on pullbacks within this particular method here, these would be the most opportune places to purchase right at this time. And this really wouldn't matter if it was stock as it is here or if it's a future or a currency pair. What we're looking for is a nice trend and we want to purchase on the pullbacks. But once again, very easy to say when we look back in hindsight. Well, here's our first edge, and here's what's going to help us. The indicator that we use for this particular method are the dodging channels. They're a very popular indicator, and you can actually find them with Metastock. If you can't, contact them, and they should be able to supply you with them. Very common, very popular tool, which you can just basically format on your computer. It will help you discern what the trend is. This is what we use on this particular method. So let's see how we employ these with the trading of uptrends. All right, so what we want to see here is we want to see that all these 3 dodging channels, as you see, these are the dodging channels, the top, the midline, and the bottom. What we want to see is that they are all headed in the same upward direction. Now, they have this kind of stair-step way of going up. And many times you'll see one that is going sideways, as you see right here, they're all in sync. But other times one will be going up and another one is going sideways. The rule of thumb is that if the last bar is coming from a lower situation. In other words, if we're going here and we came from a lower level, then we are still going upwards. We are still in a nice uptrend. So that's what we're looking for. We're looking for a stair-step type of approach where all 3 are in this nice stair-step. They don't have to be in sync with each other, but they have to still have this nice stair-step approach. And what we want to look for is once we have this uptrend in place with the 3 going straight up, you will see that price will be rising and then it will sell off and come into the midline. All right, this is your buy zone. This is where you want to look to purchase. Now, we're not going to just simply buy at the market. We have some rules, but we want to wait for price to rally and then sell off down to that midline. This will be our buy zone. All right, simple enough, because that's where we should have some nice healthy area for a pullback. All right, so let's look at BBY once again. Obviously, once again in hindsight, this is where we'd like to buy at all of these particular pullbacks. But how could the dodging channels help us in this particular example? Well, we simply add the dodging channels. And isn't it amazing how each and every time we pulled back, we came right to that midline and then resumed the upward rally. Okay, sometimes we stayed here longer than others, but we still came just about to that area and then we started going higher. You see how this is a great edge? Just a very simple, popular tool, the Donchian channels that are set at the generic settings, and then you can just employ. There's nothing that you have to have this proprietary indicator or have all these tremendous and weird settings. Just simply plot the 21 period Donchian channels. Now some Donchian channels are plotted at a 20 period. It's okay if it's 20 period, but the standard is either 20 or 21 period. All right, so how will we employ this when we're trading downtrends? Okay, so we just showed you a great example of an uptrend. Let's look at downtrends. And once again, I see some people asking questions. Remember, we're not going to answer any questions until we get to the end, so just write them down so we can answer them towards the end. Now, as you see here, we have all three Donchian channels in this same type of stair-step manner going lower. They don't have to be in sync. As you see here, the midline went down right here, whereas the lower line went sideways. That's okay as long as you're coming from a higher level. We have a nice downward stair-step type approach and they're all going lower. So we want to see them all in sync in terms of the directional sync. And this time what you want to see is price will be selling off, and then when price bounces up to the midline, this is your sell zone. Once again, we're not going to just sell at the market, but we're going to just know that this is the only place we can look to go short at if price touches that sell zone. All right, so let's look at, I believe this was Apple. This was Apple coming into the beginning of the year. As we can see here, Apple had a really nice sustained sell-off at the beginning of the year, and a lot of people were trying to pick a bottom. We know, once again, that's a recipe for disaster. It's much easier if you just look for the pullback areas to go short, okay? But once again, in hindsight, that's very easy to do. How do we do that in real time? Well, we simply add the Donchian channels. And as you can see here, once we touch the midline, this is where we start to look to go short. Once we touched anywhere in this circle here. Same thing, price sold off. It comes up to the midline. That's our area to look to go short. We still need some rules and some structure in which to tell us to go short, but we're just telling you where the zone is. In other words, you cannot short until price has touched. Okay? Because that's a high probability area to go short in this instance, just the same way it was a high probability area to go long. All right, so now we have shown you how to use this tool and how to be in sync with the trend. Now let's add some structure, as we said. Let's add some rules to tell us when to enter, where to place our stop, and where to exit. I'm going to be sharing with you actually what's usually just reserved for members of specialist trading, but I'm going to give you the most standard basic rules for trading one of our most popular as well as consistent strategies, and that's strategy number 1. All right, so here's our second edge. We'll tell you how to enter. We'll give you the stop, the generic stop, and the generic exit for this. All right, you're entering. You may want to write this down. I believe this is being recorded, so if you don't get a chance to write this all down, you can request the recording from Jeff and he'll send it to you. But if you're entering, look to buy when price begins to decline. Remember, in an uptrend, price will be rising, but we want to look for that pullback, that sell-off. So when price begins to decline and touches the rising mid-Donchian channel. Okay, so price should at least touch the rising mid-Donchian channel. What we want to do is, that's our trigger. So enter when price trades one tick above the previous bar. So as long as we touch that, either we touch it or we're below it, and those 3 Donchian channels are still rising, we're going to enter on a trade of one tick above the previous bar. All right. Let me show you what that means here. All right, we're looking at BBY. Once again, we see that we have all 3 Donchian channels headed higher. So the first thing we do is wait for a sell-off. As you can see here, we have 2 sell-offs. One here that touched the midline. This sell-off really didn't reach the midline, but we have another one here that did. Okay, so these are our 2 buy zones, where we're looking to buy once we touched. Remember, once we touch and are either touching or below the rising lines, we can apply our method to enter. In other words, this is where we wait for price to trade one tick above. So we continue to track it until right here, that's where it traded one tick above. Same with this example. It touched the midline, So we'll buy if we trade one tick above. Well, we continue to track it as long as we're touching it or below, and then we enter. So as you can see, you're tracking, and that's your entry point, right when price trades one tick above the previous bar's high, as long as it's meeting the requirements. How about if we want to go short? Well, here's this example in Apple again. Okay, all three Donchian channels are headed lower. So therefore, price is accelerating to the downside. What we want to see is a little pullback or a rally, a bounce to the midline, as we see here. And actually, even though this looks like it, I don't believe this was an actual touch. I believe the closing touched it, but we want the range, the high to low to touch it. So that actually isn't a proper setup, but this one was. So you have this setup and this setup right here. As you can see, price rose and we eventually touched the midline. So these are our areas to look to sell. This is where we want to look to sell. All right. Obviously, we're not going to just simply sell at the market once it touches, because sometimes, as I'll show you in other examples, we'll touch here and then we'll keep going higher. So we have to employ our entry method, which is simply once we touch, we're going to only go short if price trades one tick below now the first bar that touched. And as long as we continue to touch and we don't go below or we go higher and all three Donchian channels are continue to head lower, we'll continue to employ this. Same example here, we finally touched here, and this is where we will enter to go short, one tick below. So that's our entry right there on both of those trades. As we can see here, even though this looks like this may have been an entry, on closer review here, it was actually just the close that touched the midline. What we want is the range from top to bottom, somewhere of the range to hit and touch and intersect the midline, which it did not. It's unfortunate because that would have been a nice short, but I really don't think you would have been able to get short that anyway. All right, so let's say we're in the trade now. We've employed that entry technique. All right, this is just one of our just standard techniques. We have more advanced techniques for entry, but this is just the standard entry. Where are we going to protect ourselves? Well, you just simply place your stop just below the lowest low or the pullback. Let me show you what that means here. Here's where we entered right here, okay, once we track this and once price traded above the previous bar's high. And so once we entered, the lowest low at that time was right here. So we'll place our stop just below here. Now, we show you in our course exactly where to place. Sometimes some people want to place it one tick. Other people would like to place it a half a point. It's up to you. And we go over that with you and show you different ways in which to employ the stop. Now, the same thing here. You would have entered right here in BBY and simply placed your stop below the lowest low of that most recent sell-off. Simple enough. Same thing with Apple on the downside. We entered here to go short and we entered here to go short. So where do we place our stop? Well, just above the highest short-term high after our entry, and that was right here. Okay. All right, now our third and last part of this second edge is where do we exit? Well, our most standard exit for this, once again, in the course, we give you more advanced exits to stay in the trade longer, and we'll show you some of these examples in just a minute why you'd like to learn that. And we also share with you advanced entries and advanced stop placement. But the standard way to exit is simply, if you're long, exit when price touches the high Donchian channel. That's it. You can place a limit, or if you're lucky enough to be in front of your computer, you can just simply sell at the market once it touches. And if you're short, cover your short when price touches the low. Okay, that's how simple it is. Remember, I told you at the very beginning, I struggled for years trading. It wasn't until my mentors told me to simplify things that my trading began to become more consistent. And so you'll see how simple this method really is. We enter right here. We placed our stop below the lowest low. And when price rises, hopefully back, we're either, if we're wrong, we're going to get stopped out, or we can exit when price touches this top Donchian channel. Same thing with this trade. We would have entered here, and when price touches the top Donchian channel, if we're lucky enough to still be in the trade, this is where we would be exiting both of those trades. Same thing to the short side. All right, we've entered here, and we've entered here. We have our stops in both of our trades. So what we want to do is wait for price to hopefully come down and touch the bottom line. If we don't get stopped out with a small loss, we can come down and touch the bottom line. Or on this particular trade, when we touch right here. Okay, you can enter with a limit, you can sell, cover at the market, it's up to you. Now, as I stated, these are standard generic exit points. Let's look at some more stock examples. We'll look at some different time frames. It doesn't matter. I saw someone ask this, and remember, please wait till the end to ask any questions, but it really doesn't matter what time frame. There's no best or worst time frame. It all that matters is how you want to trade it. So here's another example here. As we can see, I believe this is a daily chart in, I can't read it with my glasses. Let me, oh yes, this is Pandora, and as you can see, we have all three lines headed up in a stair-step fashion. We wait for price to sell off. Once we sell off, we can proceed to wait for price to trade one tick above, which it does right here. So we enter it, we place our stop just below the lowest low of that pullback. And then we're either going to get stopped out with a small loss, or once price touches the top line, this is where we'll exit. So now, had you placed a limit order to exit, well, the next day you had a nice gap opening where you would have picked up some extra points. If we look here in Tiffany, this is an interesting chart because once again the price, or I should say the Dodging channels are headed higher. Now we have a sell-off. This activates or triggers where we start to have the countdown. We enter at this point here, place our stop below the lowest low of the short-term pullback, and then as you can see, once we touch the top line, it was almost like magic where we stopped and went lower. So that was a nice trade. Now here's the beauty of this. People worrying about what the best time frame is. As I stated, there is no best time frame. It just matters how many signals you want. Obviously, if you go out to a longer time frame, such as weekly or monthly, you're going to get less signals because of the heaviness of the weight of the longer time frame. Or you're waiting a week to have one bar as opposed to maybe waiting 5 minutes for a bar. But it works just as well. As you can see here, Tiffany, this is going back now to June. This is a weekly chart. Guess what? Same thing is happening as opposed to that daily bar chart. Well, we wait for price to sell off, to touch the midline. Once we trade one tick above the previous bar's high here, we enter, we place our stop, and we wait for price to come up and touch the highest Dodging channel. See how simple this is? This is how you trade with the trend. This is how you are in sync as opposed to try and pick tops and bottoms. Now, if you want to go short, here's another example in ESV. As you can see, the lines are headed lower. So we're looking to go short now. They're all in sync. So we need price to rise, which it does. It first touches here. This is the trigger. So if price traded below here, we would have gone short, but it didn't. Now the second bar here is now the trigger on this daily bar. So we waited. Now we got short on this day and placed our stop. And we simply wait for price to trade down to the lower Dodging channel, and that's where we cover. Here's an example now in Win. Once again, you can see here this is a very high price stock, over $100. Doesn't matter if it's a $5 stock or a $150 stock, the same principle occurs. We wait for the pullback to the midline. We enter once price trades one tick above and place our stop, and then exit. Now, here's a perfect example where someone, especially our new students who purchase our course, would say, boy, Steve, I love this technique, but many times I'm getting out too soon. It just keeps going higher and higher. Well, remember, once you're in the course, we have other videos and other ways in which to extend. You just have to, study the course because we teach you advanced exits as well as advanced stop placement and as well as advanced entries. Different ways in which to keep your risk lower, different ways in which to extend into the trade as long as you like. Now, pay particular attention to this weekly chart of the spiders. What you can use this for when you're looking for the trend is actually to use it as a directional tool. Now, even though these were two really nice trades in the spiders coming at the end of the year and just roughly in June and July of this year on a weekly chart, as you can see here in the spiders, you would have gone long both of these and had some nice gains. But you could have also said, well, I'm not going to trade the spiders on a weekly basis, but I'll use it as a trend identifier for the market. So in other words, if all three of these Dodging channels are rising on a weekly basis in the spiders, which is the ETF for the Standard & Poor 500 index, well, basically then the index should be going higher and I should be looking to buy other stocks that maybe fit my price range, such as $20 or $30 stocks. So you could use this as a trend identifier, or if we got a buy signal here, just to go to the daily bar charts or hourly if you'd like to trade that way in the smaller price stocks. All right, so those are for stock traders. How about E-mini traders? Okay, well, a lot of E-mini traders, a lot of the people in our courses like to trade intraday, so we can show you some really nice examples trading the E-mini intraday. This was last week, I believe, a 10-minute chart. As you can see, same principles. All Donchian channels are in a stair-step rising pattern, so we wait for price to touch the midline. That activates where we start to get ready to purchase. If price trades one tick above the previous bar, which it did right here, we place our stop. And then we exit once again once price touches this. Now that's once again the standard generic. You could have stayed in this trade longer if you'd like. Or to go short. If you like to trade a 1-minute bar, here were a few trades. I believe this was just earlier this week. To go short, really well-defined Donchian channels headed lower. So all we want to see is price rally and start to rise and touch the midline. Once it does, this is where we enter to go short. And in about 5 minutes, you make a quick point. Another setup here. Roughly about an hour later, you enter and you make another quick point. We want to go out to a higher time frame. Here's an hourly chart. I believe this was last week. If we look, we see that we're still following all the Donchian channels rising. We wait for price to sell off, and once it touches, that's our trigger, and we want to see price trade one tick above that, which it did. We enter, we place our stop, and we exit once price touches right here. See how sometimes it magically gets right to that Donchian channel line and then stops. And then once again, if you want to use this and trade on a higher time frame, a lot of people like to trade the E-minis for longer time frames. You could have done this on a weekly basis. Here's that same setup again in June, coming into June to July or so. You could have gone long here and had a nice gain trading the weekly E-minis. Now I see some of the best examples are in the Forex markets, because the Forex markets, in my opinion, trend better than most markets. I think they trend better than stocks. So if you are a Forex trader, you're going to see a lot of these examples. Here's a great example in the Canadian dollar. As we see here coming in to June or so, we had two nice examples where you would have purchased, sold at the top line, wait for price to sell off again. Once you trade one pip above, then you would have exited once again. Here's an example to go short the Swiss franc. Okay, this wasn't very long ago. As you can see here, we're going lower. When price rallies, it touches the midline. That's where we start using our countdown to go short. You'd have entered here and exited when price touched the lower line. You see, we're using the same thing as I've shown you. Nothing has changed. We don't have to change because we're trading the Forex or because we're trading a daily or a weekly bar as opposed to a 1-minute bar. You see, when things really have validity to them, you can use them in any market, in any time frame, and in any direction. And most of the time, they're extremely simple. My mentors taught me this. Said, Steve, it's the easiest thing in the world to complicate your trading, but it's the most difficult thing in the world to simplify it. So what stands in the way of most traders is that they're overcomplicating their trading. They have too much outside stimuli coming in. Either too many chat rooms or trading rooms, too many indicators, watching too much noise, worrying too much about what's going on with the market. If you simply just follow a few rules, you'll be able to really get in sync and hopefully become a more consistent trader. Now here's a 10-minute chart of the Australian dollar. I believe this was just from this past week. Once again, if you go to smaller time frames, such as you're doing here, your gains are going to be much smaller. Your risk is much smaller, but it will add up. Each one of these trades had about 10 pips, or it was worth about $100. But once again, it was on a 10-minute time frame. If you want to get the larger gains, you can go out to a higher time frame, such as weekly charts. And here is on the euro-yen. Perfect scenario. All three Donchian channels are headed higher. Then price begins to sell off. The minute it touches the midline, that's where you start the countdown and wait for price to trade, where ultimately you did right here. You place your stop just below, and then once we touch that top Donchian channel, that's your exit point. And then lastly, as you can see here, that was a weekly chart. Where if you want to go out to a monthly chart, well, we're looking at monthly charts in the same currency pair, the euro yen, and guess what? A totally different setup. If we went back, we now have the euro yen going lower because we're in a different time frame. Doesn't matter. We're not going to use a higher time frame to discern what the lower time frame is. You can do that if you'd like, but we just basically trade each setup for what it is. And in this particular example, we touched the midline here and went short and covered. Waited for price to rally again, touch the midline, enter in short again, and then cover. This is a perfect example of why we always either sell or go short when we wait for price to trade one tick below or one tick above, because if you simply waited for price to touch the midline, let's say you had done that right here in these two places, well, you would have had some very nice shorts. But what if you had done it one more time? Remember, once again, as I stated, picking tops and bottoms is a recipe for a disaster. Let's say you were picking a top here and you said, well, okay, so we did it twice. I picked the top. Let's go back to the well one more time. And it's on the third time here that you give everything back because it just continues to go higher and higher and higher. That's why we wait for confirmation for price to trade 1 pip, in this case, below the previous bar's low. Okay, so we just shared with you what strategy 1 is. Remember, once again, this is a great strategy we have that's usually reserved just for the members of Specialist Trading. We share with you all the rules, the entries, the exits, and the stops in its most basic form. You should be able to, if you have all the components and understand this properly, you should be able to at least paper trade this starting tomorrow. And I would advise everyone to paper trade this first. Even the students who join our course, we instruct them to paper trade it for a few days, a few weeks, or a few months, just until they really fully understand the process, because that's how well you can learn. But one of the things we have added that will help you learn this process is the add-on, which comes with the course. And this only comes with the course. And what it is it automatically generates the up arrows when there is a trigger setup. So you really don't have to wait around and worry exactly if you know what you're doing, and we want you to understand it, but this add-on will automatically generate when we have come to the midline. And a lot of people just want to make sure that they're in sync and that they're being confirmed that they are doing the right thing. So the add-on will tell you exactly where these buy and sell points are, as you can see here. These are automatically generated. We have this add-on for Metastock users. As we see here, as long as we are meeting all the rules and we haven't entered into the trade yet, the add-on will continue to either generate buy or sell signals, as we see here in this weekly chart of the spiders. And we also see here, it's in the E-mini. Here's a 5-minute chart of the E-mini. And I believe this was just this week as well. These are actual signals that you could have taken using this add-on that automatically generates up and down arrows. Once again, just for Metastock users who purchase the course, we want you to understand exactly why you would be going short or why you'd be going long, but in your training purposes, with the add-on, you can see where it would take place. All right, so let's recap here, because I know a lot of people probably have a lot of questions. And what did we share with you today? Well, we gave you the first edge, which is the proprietary indicator. That's the Donchian channels. Now, those are available at Metastock. If you're having trouble locating or finding them, contact Jeff. He should be able to set you up with those real quickly. Standard, the setting for the generic use of the indicator is either a 20 or 21. We use a 21 for R, but if you happen to have a 20, that's fine. There's nothing wrong with that. It should be roughly around that time period. Then we also shared with you entries, stops, and exit rules, the most standard generic way for entering, for placing your stop, and also for exiting. Now remember, these are just the basic format. In the course, we give you much more advanced ways in which to stay in the trades longer. And I'm sure you saw a couple of those trades where you would have exited and the market just kept going in your desired direction. Well, we share with you how to stay in there, our proprietary techniques and things that I've learned over my years of trading. And then lastly, we share with you the strategy number 1 add-on for Metastock users. You see exactly how it generates buy and sell arrows, exactly where you should be getting ready to place your trigger for entry. You just still want to wait for price to trade either 1 tick above those arrows or 1 tick below, but at least you know exactly where they are, so you're in sync with the method. So what I'd like to do now is just share a couple of minutes with you and invite you also to become members of Specialist Trading by purchasing strategy number 1 with the MetaStock add-on. The beauty of this course is that you get immediate online access. This is not something you have to wait to be shipped to you or whatever. You will have this in the next 15 minutes if you decide to become a member of this quickly. This comes with complete course rules. I just shared with you the tip of the iceberg today, actually, for entries, exits, and stops. There are so many more ways in which to trade it to actually highlight your trading and to really get you on the road to that consistency. It comes with detailed instructions, as you saw how much importance I give to detail here. It comes with 4 videos, online videos. We tell you all the different advanced ways for entries, exits, and stops. PDFs of the rules so you can print out anything and study at your own leisure. And then lastly, my personal email address. You can contact me whenever you'd like. If you have a question, if you don't understand why we're going long at a certain place or why we're going short, this will come with the email address. You can contact me anytime you like, and I'll answer as quickly as possible. Now, as you saw in all those signals and all these examples, these were roughly either within the last month or so, and some of them were within the last couple of days. Even at $6.95, that is a tremendously discounted price, but we're going to discount it even more for the attendees today, $200 more, down to $4.95. So if you want to pick up the course with all the advanced entry, stops, and exits, as well as the add-on from MetaStock, this is for a limited time only. We've reduced the price down $200 down to $4.95. And also, we also have another special offer as well. If you're new to MetaStock, if you haven't purchased MetaStock yet, or if you haven't used it, what you can do is I will provide you with a link in just a moment here, but you can go to this link and purchase 1 month of MetaStock, and we'll give you an extra 2 months free. So you'll have a total of 3 months for the price of 1. And this will come with the add-on, with the strategy number rules, and with the course in its entirety. So this is a great deal, as you saw in the examples. Now, we're not going to promise you and tell you that, like some other educators do, that this is works 200% of the time. No, there are times where you will get stopped out with a small loss, but you saw that the small losses are smaller in terms of risk-reward ratio to what you can make if you use even the standard generic exit. So it is a great technique. I personally trade it. You can trade it in any market, as we just showed, in any time frame. There is no best time frame. There is no best market to answer a question. It's really just what meets your needs. And we're there with you every step of the way. It's pretty much, people have told us our courses are more like a mentorship because you're in contact with me. You can personally reach me at any time you'd like. And it's really personal. We're a small company, but we like to make sure that you fully understand, because we're really made up of a bunch of traders ourselves. So in closing, if you have any questions concerning this particular deal we have, you can go to our sister site, which is protraderstrategies.com. That's where we sell and promote all of our individual strategies, such as strategy number 1. If you happen to have a question and want to contact us with any questions concerning anything I went over today, or the discount, how long it's going to last, or anything regarding strategy number 1 and the add-on, you can contact Brett Marsh at brettm@specialisttrading.com, or you can simply give us a call at area code 310-844-7220. Now, I don't know, Jeff, if your mic is working, but I will take questions right now, and I will see if I can go back here. I just want to make sure that I don't miss anyone. And also, if I happen to miss anyone, if we run out of time, just contact us at the information here given below, either the email address or the phone number, and we will get back to you, even if you just want to ask a question about what we talked about today, okay? Ed Trader asks, is the midline just a 21-period moving average? Well, yes, it is, but it's the way it's structured. In other words, we don't want the moving average to be, the reason why we don't just say plot a moving average and wait for price to come there is because moving averages, as you know, have a slope. And we like the beauty of the Dodging channels, the way they put everything in more of a stair-stepped approach. So that's why we use that, okay? Let me see another question here. What are the settings do you use? Well, Bob asked that. Well, the only setting we're using is a 21-period Dodging channel. That's it, okay? Dennis asked, do you use another tool like IFR to validate the entry point? That's a good question, Dennis. Yes, we do use one other indicator to fine-tune our entries and to give us a higher percentage of success, but that's basically in the course. We go over that in the course, okay? So I can't really give all that information away. We pretty much gave you the standard generic rules, but I can't give everything away, or it wouldn't be fair to the people that have purchased our course. So. Dennis asks like as if touch the median line, and if it's overbought, it's generates more confidence to the signal. Or oversold, you should be saying. Yes, but really what we're looking for, Dennis, Dennis is asking basically if we're oversold, it gives more validity. Yes, but we're not so much concerned with overbought, oversold. This is not some type of an oscillator. We're just concerned that price has pulled back enough. And usually when price pulls back to that median Donchian channel, not all the time, but many times it will stop and reverse and go back in the standard direction as long as we're still in that trend. So we're just looking for a nice pullback and a way to spot where to enter in that pullback. And then that's it. It's that simple. What else do we have here? What is the middle line in the Donchian channel? Yes, that's the same question as being asked. That is a 21 period moving average, but it's the way the Donchians are put together. Now, I'm not going to go into the formation of exactly how Donchian channels are structured, but you can see for yourself once you plot them. It's just the way in which a 21 moving average is displayed. What moving averages can you use besides if you don't have access to the Donchian channels? Well, I mean, worst case scenario, I would say you would just use a 21 period simple moving average. It's not as good, but you know, if you're a Metastock user, you should have access to the Donchian channel, so it should be very easy. That's why we encourage everyone to become a Metastock user. And once again, with the special deal we have here, you can purchase 1 month and get 2 extra months for free. So you can get the add-on for roughly 3 months and all the rules and all the advanced entry rules for the purchasing of 1 month. So it's a great, great deal. Person is asking what are the best time frames. Once again, there are no best time frames. It's really what works best for you. Ed is saying turtles use the middle Donchian channels for breakouts, correct? Yes, they do, but we don't use it in that way. That is still in sync with the trend. The only reason we're using it is for a pullback strategy. There are 2 types of strategies. There are continuation, which mean you're looking for a breakout, where price just kind of hovers and consolidates, and then it breaks out or it continues in that direction. And then there are pullback strategies. This is a particular pullback where price is pulling back to the midline, and we're looking for ways in which to enter. Let me see here if I can scroll down to another question. Someone's asking if the breakouts still work. Ed, I don't know. You'd have to go to one of their presentations. I'm not sure. We don't really use them in that format. Okay. Gene, when you're asking about the price for Metastock, I would contact Jeff Gibber or contact the numbers here because, as I said, we have specials on that. And Brett Marsh at specialisttrading.com or 310-844-7220 can give you probably a great deal. Once again, you know, I'm more in charge of the educational resources of the company, but I'm sure you can get a really nice price on the purchase of Metastock. And also, if you purchase this, course, this will all come with you know, the add-on that you can use with Metastock, and so you will be getting everything included, as well as the advanced trading, as well as all of the advanced entries, exits, and things that we share with you and teach with you. Charles is asking, is this strategy only good in trendy markets, not range-bound? Yes, it is mainly, as you can see here, we are looking to trade with the trend, but so many times when markets are range-bound, well, that's where people get whipsawed. So even though we have strategies, different strategies that will trade better during range-bound markets, this is a particular trend-following strategy. So we're looking for trends. But remember, if you don't find a trend in the daily bars, well, many times you'll find intraday trends, and other times you'll find weekly trends. So you're always going to find a trend somewhere, and this works extremely well with the trend. It's meant to trade pullbacks within the trend. Any more questions? Remember, this is a great, great price. If I can just backtrack here and show you, the course usually runs for $6.95, and as I stated, even at that price, it's really a steal. But we're discounting it for all the attendees today, another $200 for all the Metastock users and for new Metastock users, so that you can really take advantage of this. As you saw in the presentation, there were some really nice examples of how well this works. You get the add-on with Metastock so that it automatically generates the buy and sell arrows. But you also, more than any of that, you get the information, 37 years of trading, so that you can employ this and you really understand what's behind this particular method. Okay, so it's not like something where you're going to be seeing an arrow and you're just going to buy and not know why you're doing that. We teach you the entire process of why you should be, and if you want to stay out, why you should stay out of certain trades as well. Let me just go really quickly back to the final page here. Okay, I hope I've answered all the questions. Once again, if we, conclude here and you happen to come up with a question, don't worry, just copy down our email address here or the phone number and we will answer any question you have. It doesn't matter if it's about purchase, it could be something about the particular strategy, and we'll just try to make sure that you fully understand what we went over today. But we really, want you to take advantage of this great deal with Metastock and with specialist trading and pro trader strategies so that you can pick up this really low discounted price. Okay, this is a great strategy. I trade it myself, and you'll see how well it works when I'm there with you one-on-one. All right, well, if we have no further questions, I don't know, Jeff, if your mic is still working or not, but if it's not, I just want to close with showing our disclaimer one last time. I showed you a lot of results. A lot of them were performance results that were actual trades. Some were hypothetical. But please remember that we can in no way guarantee that any of the results I showed you will be repeated in the future. I want to thank you all for attending today. I want to thank, once again, Jeff and all the people at Metastock for giving me the opportunity to speak. I really hope that your trading becomes consistent. I hope that I was able to share with you something. Remember, even if you want to start trading this, we always really urge that our students paper trade first, just so that they fully understand the process. But if you really want to understand the process fully, you have to become a member. So I look forward to you all becoming members of Specialist Trading. Thank you so much. We'll see you next time. Thanks to Jeff and all the people at Metastock. We'll see you. Bye-bye.